Crypto. How can you build your dream by learning these things? Every day, more and more people begin to come around to the reality that cryptocurrency is here to stay. With reports on various news platforms about cryptocurrency and the market having publicly fluctuated the whole year through, everyone weighs in on the state of the crypto market, but no one seems to provide many solutions, and those that do usually charge for it. So, in the interest of helping new potential investors, let's take a look at crypto and how you can build your dream by learning these things. Number 1. Have the right motive. Okay, this seems like the most obvious thing in the world, but you won't believe how many people seem to forget it. It's totally vital for you to have a clear purpose for getting into cryptocurrency trade. Whether you're in it for day trading or just to scalp and split, you need to have a purpose, and that purpose needs to be clear in your mind. Trading digital currencies is a zero-sum game. You need to keep in mind that for every win, there will be a loss. Someone always loses. The cryptocurrency market exists as it does because of whales, people who throw vast sums into it. But do you know what else these whales are great at? Waiting. They are extremely patient and are waiting for innocent newbie traders like you and me to make a mistake, and they'll seize our assets. So remember your purpose, and remember that you're better off gaining nothing than rushing and losing it all. Sometimes it's better just to spectate. Number 2. Set targets and stop losses. You might be surprised to hear exactly how important stop losses are in trading. A stop loss is an order placed with a broker to buy or sell a security when it hits a certain price. It's designed to limit the amount an investor stands to lose, and as an investor, you should be sure to research them. Every trade you get into requires you to know when to cut your losses and get out, whether you're making a profit or not. Choosing a stop loss is not random, and it is extremely important to remember that you should control your emotions. A great point to set your stop loss at is the cost of your coin. So if you paid $100 for a coin, set that as the minimum point you're willing to trade. This means that if you're unlucky, you can still walk away with what you invested originally. Number 3. YOLO or FOMO. FOMO, as many know, is the fear of missing out, and it's one of the biggest reasons why many traders lose and bottom out. It's not a good idea to follow the crowd and panic buy a coin that's being pumped up by outside sources or celebrity tweets, etc. Beware of listening to the hype and jumping in, because this is exactly the time when those whales we mentioned before are going to be grinning and waiting for you to buy in. What do you suppose normally follows? The coins that the whales bought earlier end up circulating through small traders, and then suddenly oversupply happens. Boom! Next thing you know, prices drop, losses start, and you are hemorrhaging money. Stay calm, stay tactical, and don't let your emotions get the better of you. Fear is not a good reason to do anything. You will be shocked to discover that wise traders never charge headlong in the direction of massive profits. Stop and think. They really don't. Wise traders stay put and gather small but sure profits from regular trades. As the saying goes, little pigs eat a lot, but big ones get eaten. Remember that it's far wiser to accrue profits from small, regular trades on reputable services, and above all else, think about investing less of your portfolio in a market that is less liquid. Liquidity is life for a cryptocurrency, and lack of liquidity is hugely detrimental to a coin. Number 4. Avoid volatile market conditions. Most altcoins' prices fluctuate depending on the current market price of Bitcoin. Bitcoin is the king, of course, and is relative to fiat currencies, though it is also highly volatile. This means that when Bitcoin goes up in value, altcoins tend to drop, and vice versa. The market is blurry when the price of Bitcoin fluctuates, and as you can probably guess, this prevents most traders from really being able to understand what's going on. In these times, you would be wise to steer clear of trading, or if you really must, to have close targets. Number 5. Don't just buy because it's cheap. Most new and small-time traders can fall into this trap. Buying a coin just because the price seems affordable or low is rarely a good idea. The decision to invest in a coin should almost never have much to do with affordability. It's its market cap that matters. Calculating market cap on the stock market is done by multiplying current market price by total number of outstanding shares, and this also applies to crypto. A coin priced at $10 a coin and 1 million shares in the market has the same value as a $100 coin with a supply of just 100,000. This is precisely why it's advisable to use the coin's market cap to decide whether it's worth an investment. Number 6. The inside out of altcoins. Most altcoins end up losing value over a certain amount of time, and sometimes a very short period. So while you might see your altcoin of choice going to the moon, remember, it's not a good idea to hold them for too long. The metric you should use to gauge the viability of an altcoin is the daily trading volume. The higher the volume, the more suitable the coin is for long-term investment. If you're thinking in terms of crypto, you should consider coins like Ether, Factor, Monero, and Dash. These have good trading volumes all over the internet. Number 7. Diversify. Let's face it, investment markets can be highly unpredictable, and crypto is usually even more unpredictable. You can gain thousands in profits one day, but lose everything a week later. So as any good investor knows, you have to offset your losses with profits from elsewhere. The value of other altcoins is affected by the value of Bitcoin against the US dollar. So when Bitcoin depreciates in value, you'll see it mirrored in other coins' value. From this, it should be obvious that diversifying your portfolio over various coins can be enough to cover any losses that you might incur. It's fine to keep Bitcoin as your base, but it's far smarter to have some other coins that will cover you when Bitcoin drops. Number 8. Be decisive. It shouldn't be a surprise to you that the most successful people in almost all areas of life are those who aren't afraid to be decisive. Wishy-washy investors and traders always lose eventually. Whether they keep clinging to a dying coin, don't know how to choose a sound investment, or simply can't manage their goals and targets. Make use of the goal-setting tip by placing sell orders. Make sure that you set your revenue targets by placing sell orders in the order books. Your price could be met at any time, earning you exactly what you're looking for. Stay calm, and remember that keeping your cool when all around you is crumbling is a trait that will carry you through to success. It might sound obvious, but remember, you need to develop the skill of acting objectively and not from a place of high emotion. Do your research. Study the market cap. Don't let ups and downs affect you. And when you're 80 to 90% sure of your next move, make it. Make the decision and live with the result. No one ever got anywhere in this world by sitting on the fence waiting to be told what to do. Don't start trading until you're absolutely sure that you can be decisive in terms of getting in and out of a trade. Emotional trades are almost always the ones that lose people money. So keep calm and await another opportunity. It won't be long before another one comes along. It never is. So there you go. If you follow these tips and processes when it comes to cryptocurrency trading, you will see more success and be able to make some serious profits. It can be a very confusing scene to crack into, but the potential for gains is so abundant that it should be recommended to anyone who is looking for a way to take control of their life. Be sure to think clearly, apply yourself, and when it's time to begin, remember how you can build your dream by learning these things.